prices. Well, did we not anticipate that fall? Obviously, I did a full breakdown on this on my own YouTube channel at Real Ken Chigbo in terms of the macros behind that. But you guys know the macros, why this has been driving to the south is because obviously the rate hike probabilities have been drastically jumping up. What's very interesting. Obviously, we know September, October, December, but what's very interesting is that July is very much a potential play. But it depends obviously on the data as we start moving closer towards the key data points. We have the Fed's preferred measure inflation today, so keep an eye on core PCE price index. Next week, we've got non-farm payrolls, and then couple of weeks after that, we've got CPI. See, we're consolidating a little bit. It's possible that we might want to pull back a little bit, consolidate, produce a lower high for a continuation to the downside. But, you know, any pullback that we see markets don't move in straight lines. Excuse me, any pullback that we see is subject to potentially being sold, in my opinion. The key for me is that once we grind down this area here at 4K towards 3.9K liquidity break retest, we'll be looking for a potential big dump down in towards sort of 3.5K, 3.3. That's the next major area of liquidity. When you take a look there, that is what will be likely drawn into. But for now, it's going through the motions, whether we consolidate for a little bit here and form a bearish pennant, bearish flag for a breakout to the downside. But very key barrier in terms of near-term resistance to the upside will be capped at 40.50. You know, at worst case, in towards sort of 40.75, in my opinion, where we'd form a lower high for a continuation to the downside. But guys, in terms of ongoing analysis, trade ideas, all that good stuff, reports, you can get access to the KenMacro desk for free. You could do that via the links below, somewhere around this article. I'll catch you on next update.